Hi everyone, you should all be able to see me now. I think there was a problem a little bit earlier on with the logging in, but it's all live and it's working. And welcome to the Limit Orders webinar. And the point of these webinars is it gives me time to delve in more deeply on a subject which is of interest to people, which I don't just touch a little bit on because it's a webinar which is dedicated to just one subject at a time. And in this case, limit orders, and it's part of my Selma series for my Predator apprentices. And I've invited some non-apprentices as well so they can see how we do the training. And it includes everything from stop losses and entries to limit orders, money management, mind, and adding to positions. This one is about limit orders in particular. So I'm going to divert my time to that. And don't forget, mentoring when it comes to all of this is not just via email, one-to-one emails and the questions you might have, but it's also on the pipspredator.com website, which is just for the apprentices, which has a 12-week course. You can take longer if you want, just Q&A. It has videos, it has articles that I do, and those are drip-fed in bite size so that you're never overwhelmed on those. And then you get emails from me as well on just what's happening on the markets and how trading's going and any interesting trades and so on. But you also get these webinars, and I'm going to replay these and repeat these, and you can ask me questions on them, and you can also on the replays and repeats ask questions, so you can rewatch this and you learn it until it's all in there. And I do this with my hedge fund trainees, and we've seen it work. We just keep on going through it until they absolutely get it. So what I want to do is just share my screen with you so that we can talk in more detail about limit orders or take profit orders. These are orders to take profits. Where do we place them? Why do we place them? How do we place them? And so on. Okay, so you should be able to see on screen picture of me saying Selma. So stop losses entry, and we're on the limit order, the L for limit order right now. And I'm going to kick off with just what we mean by limit orders. And actually, funnily enough, first of all, I'm going to start off with something which isn't a limit order, but also might be used to take profits, and it's the trailing stop order. So let me explain to you, because what I like to do is delve into greater depth with what we're trying to achieve when we place orders, limit orders in particular. Let me zoom in a second, okay? It doesn't matter what currency this is or what pair. What I want to get across to you is this. A limit order is there to take profits, but there's a problem with that. If we're taking profits, surely we're minimizing profits. Surely we don't want to just be taking profits. We want to be adding to profits. So the first issue is not where do we place a limit order, but why do we place one at all? And sometimes I won't place a limit order. What are those times? What are those times when I won't place a limit order? It's when I think that a trend's going to continue, and I'm not, albeit in front of my computer, but I think a trend's going to continue. I just don't know how long for. So I don't want to limit my profit. But hang on, how do I then take a profit at all? What if I miss out as a result? Well, what I'll do is place a trailing stop. And the idea is that this trend could go on and on and on, but it'll reverse, hit my trailing stop at the very least. Now, you might say to me, wait a minute, if you place a trailing stop, surely it could have reversed, hit the stop, and then continued. Yes, but the thing is, I'm not in front of my computer, so I've got no choice but to place that trailing stop. So I might place an entry like here and say, look, I think it's going to enter here, and I'll put a stop loss behind it. And that, in a funny way, although there is no limit order, it is a limit order because it's taking profits at the end of a trend. And I say to myself, and I'll show you an example in a moment, if it keeps on going in that direction and I don't know how long it's going to go on for, then I don't want a limit order. I don't want to cap my profits. Okay, so that's one scenario, but there's others. We need in our armory. The most important thing with trading is it is not just that we follow one approach. We've got to fit our armory and pick the right approach for the right market. So the first thing we do, a little trick, is we say to ourselves, if I was saying this in plain English, what would I say? I would say, I think this trend is going to continue, but I don't know for how long. So I'll put no limit order, but I'll just put a trailing stop order. I've discussed stop orders in the separate webinar of how far away we put them and so on. So I won't go through them here. They're in a separate one. Okay, so that's one method. But when might I put a limit order then? So what is the point of a limit order? Okay, smash and grab limits. Let's call them smash and grab limits. This is where I know if the market falls a little, or it could be, goes up a lot, but let's say we're talking about falls a little, it will fall a lot more, but I don't want to keep watching the screen. That's when I might put a limit order in, because what I'm saying here is I think it'll go to the yellow line, which is the entry, okay? And I think if it drops down to there, it's going to go to the limit. And that's the time I might, when I'm not going to be in front of the screen, put a limit order, which is that I think it might just hit a peak and then rebound back up. And if it hits that peak, particularly if I'm sleeping, it might be volatile. It might be overnight traders who just want to test the market, just test the depth of the water. Then I want that limit order, because what that does is it just grabs it, smash and grabs a bit of a bonus profit, which otherwise I wasn't expecting. So how do I translate this into plain English? I say to myself, before I'm going to sleep, I might say, I'm going to put a limit order where I think if it falls a little bit, it's going to fall a lot. Or look, I'm in this trade. I'm going to put a limit order, which would be a bumper limit. It'll be an area where if the market hits it, I am going to get a bit of a bonus, which I don't deserve, but I'm going to get it. I'm going to grab it. And I can't afford to keep watching the market because I need sleep or whatever else. That's my sort of smash and grab limit. But you've got to look at the market and translate it. Well, the mistake so many traders make is they look at the tool first and then try to fit it onto the market. No, you fit the market onto the tool, not the tool onto the market. Let me explain that more simply. You look at what the market's doing and you say, well, wait a minute, is it likely that it might just peak up to this level and then go? So I want a limit order. Or is it part of a trend? In which case I only want a trailing stop because I don't know how long the trend's going to last. Okay. Another advanced technique with limit orders is I think, this is what I'm saying in plain English. I look at a chart like this, I look at it and I say to myself, I think, I'll put it here, I think if it falls below this level, then it will fall a lot more, but I don't want to keep watching, like I said. Okay. So what I do is I'll have that trailing stop, like I told you earlier, but without the limit. Okay. Which is, I think it's going to continue going. I think it's going to continue going if it falls below a certain level. So it's more an entry issue, but I don't have a limit. So I put an entry further down. So I say to myself, and this is, I'll tell you how this ties in with limit orders. Remember the last chart, okay, which was basically similar to this one that we're looking at, where in the last one, we said, I'm going to put a limit at a lower level because I think if it falls through this entry, I think it's going to go down to that limit and I'll take my profits. Here, what we're saying in this next one is I think if it falls below this entry, then it could just keep on going. So we're not trying to limit our profits. What we're saying is I'll have a stop loss, which will limit my profits because I need a stop loss, but I'm not going to limit my profits. What's the difference between the two? In the previous one, we were saying, I think it's going to hit a certain order and then going to rebound, and I want to just grab the maximum profit. Whereas in this, we're saying, I think it's going to hit a certain level and continue. Okay. Now, if you're really clever, what you would actually do, even if you're not near your computer, is to say, I think it's going to enter at this level and drop. And I think if it continues even more, I'll put another entry order in with a trailing stop. And even more, then I'll put another entry. So you're adding to your positions. But we'll talk about adding to positions later, not in this. Here, we're just talking about limit orders. So you see, I have several different ways, depending on what I think is going to happen with the market. As you get more used to these things, as you become more of an adept practitioner, these become second nature. But they're incredibly important to know. And all our traders need to know this, and they're tested on this, and they're given online exams. And I stand over their shoulder and say to them, right, look at this chart and tell me what you think is going to happen, why you think it's going to happen. I asked them that. So what do you think is going to happen, and why do you think it's going to happen, and what order would you place? And they'd say to me, you know what, Arpish, I think what's going to happen is if it drops to that yellow level, I think it's going to go a lot lower. And I say, yeah, that makes sense. it means it hasn't continued that upward trend. It's going to go back downwards. And heck, if it's gone to that low level, and I say, so what order are you going to place? And they'll say, I'm going to put a short entry order with a trailing stop. And I go, yep, perfect. Makes perfect sense. Brilliant. Well done. Okay. And let's give an example. Let me draw this. Okay. So this was on the US 30, so the Dow, but it doesn't matter. It can be the same as currencies. We went short and we had a trailing order. Okay. Now I could have put a limit order overnight and said, oh, if it dips, but then look what happened. I felt if it drops and I go short, it's going to continue going lower. And I don't know how much lower while I'm not at my desk. And then because it was a trailing order, it bounced up, caught the trailing order, exited. You can see the up arrow where it exited. And guess what? It did indeed continue then going upwards. But we made a nice little trade. We went short. I didn't know how much it was going to drop, but because I had a trailing, that's what limited my profits. So let's look at these different order types, shall we? Okay, and let me zoom in. The benefits of these types of orders is you're not trying to predict the size of the move. You don't need to keep watching the screen, and you don't need to predict the timing of the move. That's why, hey, that's why you need these orders. Now, my apprentices will get this in their 12-week course, and they'll get it through the email, so you're going to get mentored adequately on this. Okay, I'm not taking on any more apprentices, as you'll have seen. If you want to be added to the waiting list, just message me, and that's fine, and I'll put your email address to the waiting list. But I will talk in more detail about this, not just in this webinar, but in other emails I give my apprentices. And the reason is we focus on it a lot in our hedge fund because that's what makes us money, knowing these little things. So let's say your prediction is, you put, first of all, your prediction in plain English. Okay? So let's say your prediction is, if it moves, it will move a little. Well, if that's your prediction, then you place an entry order, maybe a little bit above where it is now, and a limit. Why do you put a limit? Because you know it's only going to move a little. So you might as well grab that limit. Okay. Then you say to yourself, I actually think what's going to happen is if it moves, it will move a lot. Well, in that case, you place an entry order at a certain level where you think maybe now, immediately, or later at a level where you think if it moves above this level, it's going to move a lot, and you just put a trailing stop. The third type, you might look at the chart and you say, it will move, but I don't know which direction. All I know is if it moves in either direction, a certain amount, it'll move a little. Well, in that case, you put in one cancels other, or OCO, with a limit. Why a limit? Well, because you know it's only going to move a little. And you place the order above and below the existing price at a level where you think if it hits either level, it'll cancel the other order. So it's definitely made the view that if it's going to go up, then I only think it's going to go up, and therefore I don't need the short order, and vice versa. Or you might say, it will move, but I don't know which direction, and I think it'll move a lot if it moves in whichever direction. So say the market's volatile, and you know, look, it's either going to go up or it's going to go down. I don't know which, but if it breaks above either level, it's going to go a lot. Well, then you put a one cancels other order, which is to say, let's say the price is 100. You might say, I'll do a buy order at 110 and a sell order at 90 with a trailing stop. And the reason is because I think if it goes above 110, it's going to go up a lot. If it goes below 90, it's going to go down a lot. How do you decide whether it's going to do those things? You look at the price chart, you look at supports, resistances, and so on. The other way is it will continue in this direction. Any pullback will be short-lived. So you say to yourself, I think it's going to go in this direction it's going in. For instance, it's falling. And I think it might pull back a little, but then fall again. Well, then you do a trailing entry and you look at the entry levels. You look at the entry webinar that I've done separately with a trailing stop. Do you see the kinds of different mechanisms? Now, at first, this seems mind-boggling. What? How am I going to know when to enter, when to limit? And how do I decide? Here's some tricks. First of all, let me tell you why this is important. This is important because if you're going to be trading only for a short amount of time on your phone or your iPad or whatever else, you need in that short amount of time to be able to look at 3 or 4 charts on different currencies and come up with ideas. Otherwise, when are you ever going to trade? Because you're only trading for a short amount of time. So you need to be able to do that. Then the other thing you need to be able to do is to translate that into plain English and say, this is one of the things I think is going to happen. Okay, I think it's going to do one of these things, and you place your orders accordingly. Yeah, I'll talk separately in the separate webinar about money management and so on, but this for now is purely on limit orders and why we place them, when we use them, when we don't use them. Like I said, we're using them based on how much we think the price is going to move. If we think it's going to move a little, we use them. If we don't, then we'll rely on the limit order. If we don't know which direction, then we use a one cancels other order. And again, we'll use a limit or trailing stop depending on whether we think it's going to be a big or small move. Got it? Now, as I said, when it comes to mentoring my mentees, my apprentices, it's not just this webinar alone. It is the emails that you send me as apprentices. It'll be the postings on the pipspredator.com website that I do, the blog, the 12-week course on there, and these webinars. So let me just run through these things once again. Here, I went short. I didn't use a limit order because I didn't know how long the trend's going to last. I knew it was, so I used a trailing stop instead. Okay. I also don't use a limit order when I think if the price moves in one direction, it's going to move a lot. So even if my entry order isn't right now and it's in the future below a recent low, for instance, I won't use a limit order if I think it's just going to continue falling a lot. If I think it's only going to dip a little, if it goes below this, so if it falls back below this, this is where the price is at the moment. And I think, oh, well, if it goes this far, I think it'll go and test that low, but I don't think it's going to go much lower. Then I'll put it that way. Okay, and here the same principle, trailing stop where you think the trend's going to last. Okay, it's a short webinar because it's about limit orders and they're pretty straightforward. And what I'm going to do is continue with the Selmar webinars onwards. And as I said, the mentoring for all my apprentices is the same as I give my hedge fund traders. You'll have exercises on the blog. You'll be getting emails on the pipspredator.com website. You'll see the 12-week course, and that'll drip feed you in bite size. Plus, I'll do more and more of examples of these and put it on the website for my apprentices as well. Like I said, I'm not taking on any more apprentices. If anybody wants to be added to the waiting list, just leave me a message. A couple of you already have with your email address, and I'll make sure that's done. And we're going to do the remaining webinars on this later on. Okay.